Hello friends. In this video, we'll talk about two companies from emerging technology space. First is Netweb Technologies and second is E2E Networks. If we talk about Netweb Technologies, then company was incorporated in 1999. It is one of India's leading high-end computing solution providers with fully integrated design and manufacturing capabilities. It offers products and solutions suit in designing, developing, implementing, and integrating high performance computing solutions. It has homegrown compute and storage technologies and deploys supercomputing infrastructure. Companies, three of these supercomputers have been listed 11 times in the world's top 500 computers. So, if any requirement of supercomputer is there, then this Netweb technology provide those solutions to clients. It is one of the few OEMs in India eligible to seek incentives in terms of both IT hardware PLI and telecom and networking PLI. So, company is uniquely positioned in that way. It can take benefit of both the PLI schemes. Uh, if we talk about E2E networks, then it is an NSE listed AI focused hyperscale cloud platform offering advanced cloud GPUs and a comprehensive ecosystem of cloud technologies designed for development and deployment of AI/ML applications. So as we can see, both of these companies operate in emerging sector of AI and supercomputing as more and more data is getting generated and more companies seeking AI to improve their performance. Companies operating in this sector are natural beneficiary of this trend. If we talk about market cap of these companies, then Netweb Technology has a market cap of around 16,000 crores, whereas E2E Networks has a market cap of around 8,000 crores. So Netweb is double the size as that of E2E Networks. If we talk about P, then for Netweb it's 165 and for E2E it's 259. So P ratio is high for both the companies. ROE and ROC for Netweb is high compared to E2E network, and they have negligible dividend yield. So since company are in growing phase, they are not giving out dividends. We observe that in traditional IT companies, they do provide very good dividends since cash flow is good and they do not have to spend so much on capex. But in case of these two companies, dividend has been less. If we talk about recent news for Netweb, then we can see there has been a news in terms of uh, stock turning into a multi-bagger for last year. Then, because of strong Q2 results, again stock price performance was good, and more or less the news are around the performance of this stock, majorly driven by its quarterly performance. If we talk about E2E, then major news are related to their partnerships. So there has been a partnership with L&T as consortium partner in AI mission GPU bid. Then E2E Network and Dell are partnering to boost AI/ML capabilities in India. So company is partnering with renowned brands, and that is in fact helping this company. If we talk about their valuation, then for Netweb, current P ratio is near its average, and as we already discussed, that P is pretty high. For E2E is even higher, and it's definitely higher than its median P of 51. But there is a reason to it that company was in losses in early 2021, but then it had started showing profit, and profit growth too was pretty good, and that is why its valuation is high. If we talk about growth rate for Netweb, then for last 5 year, sales growth CAGR is 41% and profit growth CAGR is 95%. And we could see the growth is consistent as well. There was a drop because of COVID, but then there is a consistent growth in sales, and profit as well. Uh, OPM numbers also have improved. OPM was 5% in 2019, which is improved to 14% in latest performance. Uh, if we talk about E2E network, then last 5 year sales CAGR for the company is 23% and profit CAGR is 69%. Uh, sales growth is decent, but profit growth is pretty high, and that is because of the turnaround this stock has experienced. It was in losses in 2020 and 2021, but since then profit numbers have gone up, and that is getting reflected in its stock price. If we talk about technicals, then Netweb is following an increasing trendline channel. It did take support several times and have bounced back. It has a resistance also following the channel, and current trading price of 2,832. So the stock is not at a significant discount, also because company is operating in an emerging sector, and quarterly results are also good. We'll have to see how the results pan out in next quarter. If they are not as per expectations, then we can expect stock to break down. But if results are in line, then we can expect uh, similar pattern to follow in coming weeks as well. If we talk about E2E, then stock has delivered even better performance. It was trading way below 500 and has reached high of 5,500. So there was a jump of 11 times within an year. So this is a very significant jump in its stock price. Stock since then have corrected a bit. Again, we'll have to see how company delivers its profit and sales numbers. Again, if they fail to impress, then we can expect it to break down, since stock has already given a good run up. Uh, Remember, friends, this video is only for the educational purpose. We do not provide any recommendation to buy or sell stock. Kindly do your due diligence and consult your investment advisors before taking any call.